What's up, guys? So today I'm going to be sharing why, is SCHD, the dividend ETF, an actual good investment? Let's say that you're a young investor. Is it good to just be putting your money into SCHD? I think that it's really dumb, and I'm going to share exactly why. I'm going to share my experience with SCHD, and then you can go from there. I wanted to make this video. You can decide for yourself if you want to do that, but I wanted to make this video because there's so many people. I'm going to share my brokerage account, but there's so many people on YouTube that are saying things like, oh, I put $10 a day into SCHD and these are my returns so far, and 30 years from now, this is going to be amazing. But the dividends aren't really that great. And I'll actually let you decide that for yourself. Let me share my screen, and I'm just going to show you what I mean. Okay, so share entire screen. Boom, boom. There we go. So if you look right here, this is YouTube, right? And you just type in SCHD. There's all this stuff. $5 a day in SCHD. Everyone's talking about it. I invested $13K in SCHD. Here's the dividend payout. I'm gonna tell you right now, without even watching this video, the dividend payout was underwhelming. It wasn't what they thought that it would be. So here's what's going on here, right? Retire on $50,000. Retire on $50,000 of SCHD. No, that's not going to happen. But here's how I know this, because I've already calculated this, right? We go over to this is my Robinhood account. So this is my Roth IRA. This is where I do hold some SCHD. I hold a lot of other stuff in other ETFs too. But let's scroll down to look at the actual SCHD. It's Sunday today, so the markets aren't moving at all. So that makes this kind of like a really good snapshot in time. SCHD. So the Schwab US Dividend Equity ETF. And you can see my activity. See, I don't have that much. I have like 6 shares of it. That's because I realized this and I stopped. I was like, okay, we're not putting any more into this. So here's my first dividend payout. $1.70 right there. See that? $1.70. And I have my market value is $172. So basically, whatever the market value of basically the dividend that I got is 1% of the market value that my stock is. And so I know that dividends are really paid out. It's a certain amount per share that you own, but just for simplicity's sake, I'm just going to use this model of 1% of the market value of your stock. So this is $1.70. Now this doesn't come in every month. This comes in every quarter, so every 3 months. So if I go over to my calculator over here, see 170, we divide that by 3. 1.70 divided by 3. So that means by me having $170 in SCHD, I am earning a whopping 56 cents per month. 56 cents per month. Let's divide that by 31 and just see how much I'm actually earning every day, right? If you round up 2 cents, 2 pennies per day, by me having $172 in there. So what if I wanted to make this, I don't know what your retirement amount is that you need, but I know that for me, if I wanted to live comfortably and not work or anything like that, I want to be making at least a minimum of $5,000 a month for me. So that's $60K a year. And that's not even including the fact that it's going to be taxed. I really wanted to be more than that. But let's say that I want to make $5,000 per month from my dividends in SCHD. Well, that means I would need to have a $15,000 dividend payment, because the dividend payments come in every quarter. So it's every 3 months. So my dividend payment here was $1.70. So I need it to be 15,000. So, okay, what is 15,000 divided by $1 $0.70. Okay, so gotta remember this number. I have another calculator here, but I'm just using it to type this number down. 8823.53. Okay, so we need to basically, this is the number that we need to times the amount of shares that I own by. So, but let's just go with the market value of the stock right now. Market value is $172.50. So I need to times this by 172.5. This is how much I would need to have in SCHD to be able to make $5,000 a month from my dividends. $1.5 million in SCHD at the current price. So I would need to dump in $1.5 million into SCHD to get to the point where I am making $60,000 a year off my SCHD. This is why I say, if you are trying to grow your portfolio and like grow your wealth for a later time, SCHD is dumb. Don't put it in there. Don't do that. So here's my plan. Like, what could you do instead, right? And I'm not a financial advisor. This is not investment advice. This is just education. But here's what I'm doing instead. SCHD is great if you already have a lot of capital and you want to preserve that capital and make money from having it. It's great for that, as opposed to just having it in a high yield savings account. It's great, like if you want it to like grow at like 2% per year or something like that, and also get dividends from it at the same time, so you get payouts to fund your lifestyle. That's great. But as you can see, if you want to actually like make enough to be like, I live in California, and they just considered making $100,000 a year in California to be like low wage. If you're $100,000 in a single family household, household income is considered low wages in California now. So just to make $60K, I need to have 1.5 million in SCHD. And so what makes a lot more sense to me is, even if you don't want to look at your investments and like you don't want to be actively buying different stocks from companies, I understand that everybody has a different strategy. You can invest in just the S&P 500. If you put it in Vanguard's S&P 500, VOO, they have a dividend. It's a lot smaller, but it grows at the rate of the market. And you keep putting your funds in there throughout your life, it's going to grow 10% year over year, 7% if you adjust it for inflation. And once you're about 5 years out from retirement, then you look at the market and you see, okay, is the market up or is it down right now? Are we in a bear market or a bull market right now? If you're in a bull market where the market's been doing well for a long time and you're a few years out from retirement, sell all that stock, sell all of that VOO or whatever it is you have. Maybe you have investments in other like AI technology companies, or the Magnificent Seven, things like that, things that are very stable, been around for a long time, and you're a few years out from retirement. Sell it all then. You're going to miss out on some gains from those last years, but it's better to not get to the point where you want to retire and then we go into like a bear market, or we go into a recession and it's the year that you're supposed to retire. That would not be good, because all your stuff drops and then you feel like, I need to retire, so I need to sell it, and you take losses. You'll have to wait to retire. So if you're coming up on the age where you want to retire in a few years and the market is up, sell all of your stocks, and then you can move that money into SCHD, or you can move it into SCHD, some into cash, some into treasury bills. But this way, it's like you can make your money in the market, and you can get to the point where you could actually have a couple million in SCHD, and you buy it before you retire, and you just get your dividends in retirement. You live off your dividends, and then your money just grows a little bit, but you're not going to get explosive growth from your dividends and then reinvesting your dividends in SCHD. Just my opinion.